want you to highlight to me, because you seem like you're struggling a bit with the drawing of the supply and demand levels.
Okay.
So I want you to elaborate to me, or to ask me where exactly you're not getting it right in terms of using the tools, like the rectangle tool, the line tool, because I see in the chart that you
Yeah, no. I'm struggling to highlight. You see, I can only make the square. It is highlighting the square only, but it doesn't highlight the block. It makes the square, but it doesn't highlight.
Okay.
I don't know.
When it comes to the rectangle tool, when you click the rectangle tool, just like what I did, and you draw it on your platform, right? By default, let me show you what it's gonna look like by default. I just need to, where's the parameter field? Right, by default, you're going to get something like this. It will be just a square without, without the shading part.
Highlight.
Yeah. So what you do is, if you notice, whenever you draw, either it's a trend line, or it's a horizontal line, or a vertical line, whenever you draw something on the chart, it has got these black dots. You see?
Yeah.
There's like these black dots either at the end, or in case of a rectangle, the dots are like at the top corner, at the middle, and the bottom right corner. So what you do is you go right to that dot, and then you right click, right? When you right click, you're gonna see the menu that comes with options. Then you select properties of daily rectangle. So now it's saying daily rectangle because I'm on a daily chart. If I draw this rectangle on a 4-hour chart, it's gonna say properties of a H4 rectangle. So you select that properties, then it's gonna show you this menu here, the menu for the rectangle. Here where it says style, that's where you choose the color that you want. Yeah. Me, I prefer light gray, right? And then the rest, if you want to make it thicker border and everything, this is where you choose. If you want it dotted, like the border lines, if you want them dotted. But me, I just leave it as it is. Then when you come to the second menu, which says parameters, right? Here where it says fill, it has to be selected. Where it says fill here, it has to be selected.
Oh, okay.
Yeah. Then you go okay. You see? Then your rectangle is gonna change color. Same thing applies when you draw a trend line. When you right click on that black dot, you go to properties of the daily trend line, because I'm on a daily chart. You can change the color by coming to this style here, and then you put probably say red. You see, the line changes to a red line.
Okay.
Yeah. So that's how you change the feel for the rectangle, so that it's visible. It's more visible when you draw on the chart. You're not going to be doing the same thing over and over. You just draw it, and then it's already highlighted as a gray rectangle, or whichever color that you would have chosen.
Okay.
You understand that part, right?
Yeah. Okay. Yeah, I see now. Yeah. Okay.
Yeah. So it's very
important.
important.
And then another thing. I noticed this. You see there's that blue and that red, that arrows. I noticed on the chart. What does that mean?
Which ones?
Yeah. On the chart, there in the highlighted area, there's a blue arrow and a red arrow.
Okay, this one here.
Yeah. What does that mean?
Right. These are your trade levels. Say, for instance, you'd have taken a sell trade, right? Let me go to lower time frame so that we can see much clear. Okay, there's
I just wanted to know because I saw it when I opened some charts. I saw that, but I don't know what it means. Okay.
Right. Those are signifying like where you'd have entered your trade and where you have exited the trade.
Okay.
Yeah. So it means you'd have taken a position, right? And then that position moves away, and then when it closes, if it's a buy trade, it's gonna start with a blue arrow, and then it will close with a red arrow, meaning that's where you closed the trade. If it's a sell trade, it's gonna start, it's gonna start with a red arrow at the top. And then if the trade closes in profit, it's gonna be a blue arrow.
Okay.
Yeah, that's just to show you the trade levels of the trade that you'd have taken. You understood that part, right?
Yes, yes.
Yeah. So I was still waiting for my other assignment. I didn't get it.
Yeah, I'm gonna do it. I just needed to sort out this
The computer.
parameters filtering. Yeah, and the filtering. I'm gonna do it.
Okay, I see.
Okay.
All right. Yeah. So now we're gonna continue with the supply and demand section. Last week we talked about how to draw the levels, how to draw your supply zones, and how to draw your demand zones. So I'm just going to recap a bit by opening a different chart. Let me open, say, this is just a recap. I open my British pound against the US dollar chart, right? Then you always start from a higher time frame. This is just a recap of what we did last week. Always start at a higher time frame. To highlight your zones. So for instance, we are now on this pair here, British pound against US dollar.
USD.
Yeah. So you can see when we look at this chart, let me just highlight a few areas that will be of interest. Already we've got this area here, right? And then we've got this area up here, right? The moment you open a monthly chart, you should be able to see where your price is, the current price. Right now, GBP USD is 1.31651. The moment you see where the price is, then you need to draw your attention to the levels that are in control or that are in relation to where your price action is. What I mean is this current price of British pound, 1.31651, you can see already the origins of it started here. Then price pushed further high. And you can see the levels that it's approaching. It's these levels here.
Yeah.
Right? So now what I'm going to do is I'm going to highlight these levels quickly, both the supply and the demand that we are looking at in terms of British pound and Euro USD. So you can see before the impulsive move to the upside, this big July candle. So that's July, August. The current month is September. Before this impulsive move, the last down candle is this black candle here. So I'm going to highlight its opening price, right?
Yeah.
And then I'm going to highlight the lowest between the candle that massively moves away, which is our July price action, and the last down candle. Yes, of course, on a monthly chart, the range is going to be big. You must always know that.
Okay.
The range is going to be big. Then to the upside, I'm looking at this range here because already we have broken above this. You see this green candle here? Let me highlight for you.
Yeah.
Let me highlight it. You see this green candle? That was our last up candle when we moved high. This candle here. You see that candle? But now,
I see.
this candle is already broken above, right? Meaning the close of this bullish candle is broken above the close of this last up candle. So for now, we are not going to consider it at the moment, right? Meaning we are looking at this level.
Okay.
Right? So now to draw our supply zone from the upside, we need to highlight the last up candle, right? The last up candle, which is this guy.
This one, yeah, okay.
You see? Obvious. Yeah. Can you see this candle here? You see that candle?
Yes.
The difference now is the closing price.
Yeah.
So when we say the last up candle, up close candle, then it has to be, yeah. So now I'm going to highlight that closing price. Where am I? Right. So this is our last up candle, and then the one that massively moves away is this guy here. So now we need to highlight this level here, the closing price. So we've got the closing price of the last up candle. Right. And then we need to highlight the candle that massively moves away. We need to highlight its closing price. Now you see here, there's quite a big range. The range is quite big because we've got this bearish candle, we've got this bearish candle, and then we have this third candle. So now what you do is you consider the first bearish candle in cases like this. You consider the first bearish candle. So we're gonna highlight, yeah. So we're gonna highlight its closing price, which comes down.
Price, okay.
Yeah. And then here we need to move. This must be the highest high. Should be up here.
There.
You see?
Okay.
So now I'm gonna get rid of this guy here. So of course, on a monthly chart, the range is gonna be big. But what that does is it helps you when you drop to a lower time frame. Now I'm gonna just put my rectangle 2, right?
Okay.
So now these two levels that I've highlighted, it means these levels are the ones that are in control of current price action. Meaning whenever whenever you see price coming down here, you are looking to be what?
To buy.
A buyer, to take the market to the upside. But if you see market, if you see market coming up here, you're looking to be a what? A seller.
Sell, okay.
Yeah. And take the market to the downside. So now what you do is, these are the monthly levels, right? Obviously, the range is big, but we're going to leave them on the chart because we need them there, because they're going to be our reference point when we drop down to a weekly time frame. So now I'm just going to get rid of the lines. I don't need the lines there. I just need the shape. So now I'm going to go to a weekly chart. Now on the weekly chart, you can see already we've got different zones. We've got one here. We've got another supply zone here. So this is our last up candle, the high, right? And then the open here. So you can already see that this is another supply. You see?
Yeah.
Now let me get rid of the, oh sorry, I need that one back. I need to remove the line. So now what you can do is, I'm just going to change the color of the demand, right? The color of the demand, I'm just going to put it aquamarine so that there's difference. So you know that aquamarine color is our demand zone and the gray area is our supply zone. So you can already see, so you can already see where the market is right now. You see where the current market price action is. It means you'd have been hunting for selling trades, right? You'd be hunting for shorts. And I don't know if you noticed in the group last week, I told the guys, keep an eye on GBP USD, and then I eventually said we need to sell British pound. I don't know if you, I don't know if you took note.
Yes, I'm following there also.
Yeah. So you see already, you can see that the market is in a bearish move. It's favoring more to the downside, meaning you have to take short trades. So once you've done that now, this is a weekly chart, right? So what I'm gonna do is I'm gonna come grab my text tool, right? Then I'm gonna write supply level, so that I know that this area is a supply zone.
Supply.
Yeah.
Okay.
Right. Let me just move to the right here. So now I'm gonna go to a daily time frame. Now on a daily time frame, you can already see today price action has already moved like, I don't know how many pips, like 110 pips. So you can refine the price action by further going into lower time frames. Like if you come on a H4 time frame, you can already see we've got in the last up candle here. You see this candle?
Yeah, okay.
Right? And then we had an impulsive move to the downside, right?
Okay.
We had an impulsive move to the downside. Let me get rid of the bigger. Already we know that we are hunting for selling opportunities, you see? So we highlight the high between the two candles, the impulsive candle that moves away and the last up candle. We highlight the high, right? So this is the highest point there. Let me just make this line properly straight. And then the opening price of the last up candle. And you can see already it offered chance to take the market to the downside. Already we know on a higher time frame we are looking for short opportunities only. We're looking to sell. So that means whenever we see price trading back into this range, we look to be shorting the market, because that's what the higher time frame is supporting. Yes, there's no harm in going to the upside, but it's a bit risky, you see, because you have to know that in terms of supply and demand, whoever sold when this price action massively moved away, when price comes back there, they don't need the market to keep going to the upside, because they're gonna lose. We're talking of big guys here. We're not talking of retailers. Yeah. So when price comes back into that range, of which already it has done that, right? If we go to lower time frames, you can see in this candle here, you see this up candle here.
Yeah.
Market came back. So this was that was the trade. You see, it came back to retest the what? The supply.
The zone.
Yeah.
Okay.
So now if you go to a lower time frame, then you're gonna see, you see here. So we had our zone defined here. Now I'm on an hourly chart. You see, on an hourly chart, our last up candle is this guy. You see that guy?
Is that one? Yeah.
That was our last up candle. We are now refining. We're making, what this does is it helps to minimize our risk. So the opening price, you see, the high is still the same. The high is still the same between those two candles. So this would have been a perfect shorting entry to the downside. So now we just need to be patient. You see, you have to be patient with supply and demand. So when price comes back to this area, you look to
sell.
You see?
Okay.
So you have noticed that I started from a monthly chart all the way. Now I'm on an hourly chart. And I've already defined a level that I'll be looking for. You see? A level which, when the price reaches that area, then I'm going to be a what? A seller. Other than that, I'll be on the sidelines, because I don't know what the market is going to do. I can't say, no, let's sell British pound now. Let's buy British pound. No. I'll only say, okay, guys, we need to be looking for selling opportunities once price comes here, because I expect this level to what? To hold.
Okay.
Yeah. You understand that part, right?
Yes,
so
yes.
Let me see if I can get one asset where we can where I can show you demand, because I've shown you supply all the way to a lower time frame. Let's see. Where's AUD USD? AUD CAD. Insert AUD USD. Let me see. Let's see. Go to a monthly. Oh yeah, it has to load first. Let's see. I'm trying to see which other pair. GBP USD, USD CHF. Let's go to a monthly. Right, this one should be fine. Just want it to load quickly. USD CHF. So it's what I require from you is to practice more, right? Highlight the zones.
Yes.
Yeah, highlight the zones. Don't worry about being wrong or anything. Just highlight the zone.
Yeah.
Send the chart to me, and then you say, Ivan, can you take a look at this? Then I can correct you from there.
Yeah. Okay.
Yeah. So now this is.
And then the other.
Yeah.
I'm also struggling to save the
template.
Like this picture now on the the template. Can you just show me again?
Okay, I'm gonna show you now.
And how do I send it on Telegram? I've loaded Telegram on the PC, but I'm just struggling to send it to you.
Okay, but your Telegram is now linked with the PC, right?
Yes.
So you can receive messages on the PC.
Yes.
Right. So what you do now, there's two options, right? The template, is it saved?
What template?
Like you see the chart. Remember, we customized the platform.
Yeah. That template is saved there.
Right. So let's say you want to send let's say you have highlighted your, let's say I highlighted
Your zones.
Yeah, this supply here, and then I'm gonna highlight this demand down here. Okay, let me just get rid of that. Then I highlight this demand zone here, right? And then I say I want to share this on the group, right? What you do is you come to, should be charts. This, where is that picture? Okay, I think we removed the icon. Let me see quickly. Save as picture. Just hold on a sec. Periods, template. Right, I think it's there already. Next to auto scroll. Right, you see here, next to the cursor tool, we've got the cursor, we've got the cross.
Okay.
You see here, there's this other icon which says save the active chart as a picture.
Okay.
When you click that, you see it comes as save as picture, right? Select the screen region to be saved. You just click on active workspace and then you click OK. The moment you click OK, it's gonna pop up with a menu. Let me just wait for it. I think it's on the browser or something. Right, yeah. But this is a long way. Let me show you the easy way to do it. Let me share my Google here. Where's my Google? Right. When you open your browser and then you go to, let's say, google.com. Right. When you open google.com, right, I'm going to show you a simple program that you can use to send screenshots, because that one for MT4 is it's a long process. So when you come to Google, there's a program called Jet Screenshot, right? It's a small, tiny program. Yeah, Jet Screenshot. It's a very small program, 2.9 megabytes, right? You download, download Jet Screenshot, Then when you download Jet Screenshot and install it on your keyboard, you've got a key that is written print screen. You've got that key, right, on the keyboard.
Okay.
Just check, you've got that key, right?
Okay.
Okay, let me just install it quickly. Because this program is going to make it easy for you to share the screen. Right, I have installed it. Now let me share my MT4. Right. So when you've installed it, Jet Screenshot, that keypad on the keyboard which says print screen, when you press it once, it's going to highlight an area on the MT4. Then you just select the area that you want to share. Then you save it as a picture. Then you send on Telegram. You just drop the picture on Telegram. Then it's going to send it to the group.
Okay.
Yeah, but make sure you've got Jet Screenshot installed.
Okay.
Yeah.
Okay.
Yeah, you must just try that and then let me know if you manage, or if you struggle, then I can help you over the phone.
Okay.
Yeah, that's how best you're gonna share, like, so that you don't have to take pictures with your phone.
With the phone, okay.
Yeah. And so now I was on we were on USD/CHF. I wanted to highlight for you a demand zone. So now we are on USD/CHF monthly. Let me show you the demand zone that would have given you. You see, already September has moved 125 pips to the upside. Obviously, you're not going to get all the 125. Maybe you get like 70, 80 or something. Let me show you the demand zone in relation to this current price action, right? So when you start from a monthly chart, right, you look where price is. Right now, USD/CHF is at 0.91616. That's the current price for USD/CHF. Okay. Now, when you look at USD/CHF and you look to the left of the chart, you should be in a position to see. You see that candle there?
Yes.
That's a demand zone.
Okay.
This is a monthly chart, right? And where the price massively moved to the upside on this candle here, right? And this is our down candle. So we've got these two candles, right? So I'm going to highlight the lowest low. So it's down here. And then the closing price of the candle that massively moves away. All right, let me just make my lines straight. The price has to be the same here. So it's 9855. And then down here, price has to be 623. Right. Now I'm gonna grab my rectangle tool. So this is my demand zone, meaning I'll be hunting for what?
Buying.
Buying. You see, I need to get, okay, the lines, I'm gonna leave them there for now because they're gonna be, so now already we have highlighted the area that is in control of the current price action here, right? So it means you would have highlighted this zone, right, a long time ago, and then you'll be like, okay, when price comes back to this range, I'm going to be looking to buy USD/CHF. Now we are going to drop down to a weekly chart, right? Now on the weekly chart, can you see the price action now? Remember this gray shaded area, this is our demand.
Okay.
This is our demand zone, right? Now I just need to get rid of this zone now, because I know already price is in an area where I should be hunting for buy positions.
Trades.
Yeah. So now we've got our last down candle here and the lowest low, right? So this is the lowest price action on the weekly chart. Then we've got our last down candle here, right? Now I'm gonna highlight it. Inside this range here, this is where you'll be hunting for long trades. You see? Yeah, buy trades. In other words, buy trades. Now I'm gonna go to a daily time frame. You see, I'm refining my zone. You see, so that whenever I go to a lower time frame now, it's gonna be easy for me to pinpoint like an entry point. You see that up candle there that massively moves away from this down candle.
Okay.
Now we are on a daily chart. This is where you're going to be hunting for what? For your positions now. Already we know we are supposed to be hunting for long trades. Yeah. Buying opportunities. So the low and the opening of the down candle, right? And we highlight that area. And then we've got the low.
Okay.
There's the area that we'll be looking for long opportunities. Now I'm going to go straight to an H4 chart. Right? Now on the H4 chart, can you see the reaction that happened? Right? We've got these wicks here.
Yes.
Yeah, you see the reaction that happened. We've got these wicks here. Let me see how many pips are that. Right. We've got this wick here. See, that's 11 pips. And then this one is 11 pips again. Remember last week when I said the lowest low, when you enter a position, say on a demand zone, your stop loss should be at least what? 15 to
20.
Yeah, that's the one that would have safeguarded you from this. You see these spikes here?
Okay.
Yeah, because if you had put a stop loss of say 10 pips, it means your trade would have been taken out by the wicks and then eventually run into your
go up.
Yeah, into your direction. So 15 to 20 pips, these wicks here, your stop loss wouldn't have been what? Wouldn't have been triggered, meaning that trade eventually went into profit. Is it?
Okay.
Yeah. So you can see already you'd have gotten a trade by analyzing all the way from a monthly chart. You define your demand zone, you go to a weekly, you refine it, you highlight the new levels on the weekly, then you go straight to a daily time frame. Then your execution will be H1 or H4. You see? Let me go to an H1 time frame quickly. You can see already on H1, this would have been a better entry to the upside. And this trade would have been a much, much better good trade. You can see from that demand there, it has moved already 156 pips. Obviously, you're not going to catch them because when you see this push to the downside, if you're in a long trade, it's highly likely that you're going to close that position because you think market is what? Is going back down. Yeah. So this would have been a very nice trade to the upside. So that's how you define a long trade from a monthly demand zone. You see? From this demand zone here, you'd have gotten a nice up trade here, a long trade, a buy position, which would have yielded close to 120 pips. Remember, 120 pips is a lot. That's almost like a weekly target for me, 120 pips.
Okay.
It's a lot, but now remember, it also comes down to your lot size. the lot size that you use, whether you've got a standard lot size or micro lot size or mini lot size. If you have a mini lot size, yeah, you're not gonna make much. But from micro, yeah, then you're gonna see a much better progress. So yeah, I just wanted to recap on the supply and demand zones, how to highlight them, how you enter positions. So this is going to be a regular occurrence so that it gets stuck in you. You know already that whenever you open a chart, don't just go straight to a 15-minute time frame and say, no, let me buy this, let me sell this, without knowing what the higher time frame is doing.
Okay.
Yeah. So it must be an instinct to say when you open a chart, or when someone even says, okay, let's look at gold, always look at the higher time frame first before you make any decision to say, guys, I'm gonna sell this or I'm gonna buy this. Always know what that asset is doing on a monthly, on a weekly, on a daily. If on a monthly it's bearish, on a weekly it's bearish, there's no need for you to be looking for bullish moves, because higher time frame always precedes lower time frame. So it can be bullish on H1 or 30 minutes, but as long as it's bearish on daily, weekly, and monthly, eventually on those lower time frame, it's going to fall. You get my point?
Yes, sir.
Yeah. So yeah, this is gonna be like a regular thing that I'm gonna do with you so that you understand perfectly what we are talking about. So right now, there's something that I need to introduce to you, which is also part of the supply and demand concept. And this is about channels. We're going to talk about channels. We've got what we call, we've got what we call bearish channels, and we've got what we call bullish channels, right? Because eventually, when everything is said and done, when the whole strategy comes together, these things is things that you have to include in your analysis, so that whatever analysis that you are doing, it's favorable to your decision. Because you don't want to get into a trade where you're not sure about your analysis. Always aim to enter a position which you are 80-90% sure that it's going to go into your into your direction. You see?
Okay.
Yeah. So now we're going to talk about bull and bear channels. Let me just share my screen quickly. Right. Let me share the screen. Right. Can you see my screen, right? The one with the disclaimer.
Okay.
Right. So today I'm going to show you how to identify the bull and bear channels. That's the main thing that we're going to do. It's not that long. It's only like 8 slides. Already we've been talking for like 45 minutes now. So I'm going to show you how to identify a bull and a bear channel, how you define what is a bull channel, what is a bear channel, right? So in this section, I'm going to show you how to draw bull and bear channels, popularly known as flags. Some people, they refer to them as flags. These are all characteristics of price action. You see? These are things that you have to read on the chart by yourself. You don't need an indicator to create a bull channel for you. You don't need an indicator to create a bear channel for you. So it's things that you as a trader, you should be able to highlight, say, no, Ivy, I've seen a bear channel on Euro USD. What do you think about it? Should we be looking to sell? I've seen a bull channel. Should we be looking to buy? You see? So I'll be teaching you how to master the art of trading using the channels, whether it's bullish or a bear channels, effectively in conjunction with institutional supply and demand areas, and also support and resistance. So now, one thing you have to take note, a channel, whether it's a bull channel or a bear channel. I'm going to show you illustrations and how you draw them when we go back to the chart. A channel is only of any use to you as a trader if it terminates at an important area to trade, such as a supply and demand zone or a support and resistance. If a channel does not terminate or end at a supply zone or at a demand zone, then that channel is invalid. It has to terminate or end at a supply zone to make it a valid channel to use in your trading. So a bull channel forms after a price spike that peaks out and slowly forms a short-term reversal downtrend. I'm going to show you this. This is just a definition, and I'm going to send you also these notes so that you stay with them for your reference. So the starting points for the trends should be connecting the highest highs, which is the upper trend line, and the highest lows, which is your lower trend line, to represent the flag portion. Let me just show you quickly what I'm talking about here. So we are talking of a bull channel, right? So this is a bull channel. We've got our upper trend line here, the green dotted line, and then we've got our lower trend line. So the price action in between, let me just, where is this tool here? So this price action here, see this area, that's the channel, right? That is the channel. Yeah. So now I'm going to just go back to the charts so that we can restart with the definition quickly. Right. So a bull channel forms after a price spike that peaks out and slowly forms a short-term reversal downtrend. So meaning basically market will be in a bullish momentum. Price will be moving to the upside. The starting points, the starting points for the trend line should connect the highest highs, which is your upper trend line, and the lowest lows, which is your lower trend line. So basically something like this. So market will be moving high, is it? Like this. Then you have a period where market trades something like this, right? So we've got these peaks here. So this is your upper trend line. Then you've got a lower trend line. So market is moving in an upward direction. Then there's this pause in the market. Remember, market just doesn't move all the way to the upside. There's like moments of consolidation, you see, moments of retracement or reversals. That's when you have to hunt for this bullish flag. That is if market is moving to the upside. So that when it breaks out of the upper trend line, when it breaks out, what you do is you wait for market to come back here for you to be a buyer. Is it?
Okay.
So this is basically like a demand zone, but which is in the form of a channel, a trend.
Channel, okay.
You see? Meaning you're looking to be a buyer when price comes here. You see?
Okay.
Yeah. So that's a bull channel. A bear channel forms after a large price collapse, meaning price is moving to the downside. Right? And then it attempts to form a short-term uptrend reversal. Then you see price doing something like this, right? You see price doing that. You can see already we've got an upper trend line, then we've got a lower trend line. This is the flag now. You see this area? That's the flag, right? And then the trend line, the lower trend line, and the upper trend line. So you wait for market to break out of the channel. Once it breaks out, you wait for the correction to the lower trend line. Yeah. Now this lower trend line is basically acting as a what? A supply.
Support. Yeah, a supply. Yeah. Okay.
It's acting as a supply zone, which in other words you can say a resistance. Remember, resistance is to the upside, support is to the downside. Supply.
Downside. Okay.
Supply to the upside, demand to the downside.
Demand downside. Okay.
So in case of a bear channel, you are looking for price to retrace back to your lower trend line for you to be a what? A seller.
Seller.
You see? Yeah, this might take time. If you haven't done this before, this might take time to grasp, but it's very easy. Yeah, it's very easy. So let's go on to the bear channel illustration. During a downtrend, normally after a big impulsive move, the bear channel presents a chance for the market to regroup, which is basically consolidation zone, before continuing with the down momentum, right? So market is already in a downtrend, right? But there has to be a moment of consolidation. I'm going to show you on GBP USD when I highlight on the chart a bear channel, and then I'm going to show you, I think on USD JPY, we had a bullish channel. So normally volume is going to diminish, meaning there won't be any volume in the market during the market pause. When market is consolidating, it means there is low volume, and then rapidly expands prior to the continuation. The bear channel is an upside version of a bull flag. It's the opposite of a bull flag. It has the same structure as the bull flag, only that now it's inverted, meaning it's vice versa. They are mainly made up of higher highs and higher lows. They normally form after a large price drop and a short attempt to the upside. So here's an illustration of a bear flag, right? So we've got the red lines. You see the red lines, these two lines here. Means market is in a downtrend, right? Market is moving to the downside. But during that bearish move, market cannot just continue crashing like this. Yes, there is periods when market does that, but it definitely means somewhere something is not right. There's a crash that has happened somewhere. Yeah, it can happen, but not under normal circumstances. So when price moves to the downside, when it recorrects, or when there's a bit of a consolidation to the upside, right? We're talking about a bear channel. So you get market forming higher high. You see, this is a higher high. Then we've got a higher low. We've got a higher high. Then we've got a higher low. You wait you wait for the market to break the trend line support, which is your lower trend line. Then we've got trend line resistance. You see, the trend line resistance is to the higher high side. The trend line support is to the higher lows side. When it breaks trend line support, right? When it breaks the trend line support, you wait for the market to come back here. You see?
Okay.
When market comes back there, in this range here, meaning it will be somewhere here. You see? This area here. So this is the area that you are going to be looking for selling opportunities, because you are expecting this momentum here, you see, to resume, so that price keeps going to the downside. You see? So this is an illustration of a bear flag. So now let's look at a bull. No, this is a bear channel illustration. So on the chart, it's something like this. You can see already market has been going to the downside, right? And then we had a period where there was consolidation, market just forming a channel, you see?
Channel, okay.
Yeah. Then it breaks to the downside. So this is our higher high. You see, this is our higher high. We've got another high, our higher high here. Then we've got a higher low. Then we've got a higher low. Why it's called a higher low? Because already we've got this low that was formed here. You see? So now this becomes a higher low. If this price was down here, it would have been a lower low, meaning this channel wouldn't have been valid.
Okay.
You get that point, nah? So what you do as a trader, you wait for price. You wait for price to break outside of the channel. Then when it comes back here, you see, when it comes back to your trend line, channel support, then you look to sell. And already you can see already on this chart, you can see this candle here.
Okay.
That's a supply zone. See this candle?
Okay. Okay.
Yeah. So this is our last up candle. So it means the closing price, then the highest high is here. So it means in this area here, you'll be looking to be a what? A seller.
A seller.
Yeah. You see? Because we've got an impulsive move here, our supply zone. So as long as this channel terminates here, and then there's a supply created, when price comes back, then you look to sell because you expect this down move to continue all the way. Now let's look at a bull channel. So for a bull channel during an uptrend, normally after a big rally, the bull channel presents a chance for the market to regroup before continuing with the up momentum, before continuing with the bullish momentum. Normally volume diminishes during the market pause and then rapidly expands prior to the continuation of the bullish move. It slowly forms a short-term reversal downtrend or a short-term consolidation. Bull channels are characterized by lower highs and lower lows. Remember, bear channels, they are characterized by higher highs and higher lows. Yeah. So here's an illustration of a bull flag. So we've got market moving to the upside here, right? You can already see that market is in an uptrend, but then there's this consolidation that happens here. You see, there's a reversal. Market as if tries to go to the downside, yet it's still in a uptrend. So it forms, there's this high here. Then we've got a lower high. You see, this is a lower high. We've got another lower high here. Then we've got lower lows to the downside, lower low, a lower low. So when price breaks out of this channel, see, we've got our trend line resistance, the line that connects the lower highs. Then we've got trend line support, the lines that connects the lower lows. That's a trend line support. So when it breaks out to the upside, you wait for it to come back here. Right? This is where you're looking to be a what? A buyer. You see? You look for the market to go to the upside. So now let me show you what that looks like on a MT4 platform. Here's the illustration on a MT4 or MT5, whichever one that you use. So now you can already see we had market moving in an up direction here, right? And then market starts forming lower high, lower low, lower low, lower high, lower low, before eventually it breaks out here. You see?
Okay.
You see where it broke out here? Let me just circle it quickly. Market breaks out here, right? When it breaks out, there's these two bearish candle that move back to the trend line support. You see here?
Okay.
This is where you look to be a what?
A buyer.
A buyer. You see? You're getting the picture now. And if you want to define the zone even further, you can see this up candle here that massively moves away. You see? Closing price, the lowest low in this area here, this is where you look to be a buyer, and it did offer chance 1 here, chance 2 here, chance 3 here, though it was a bit far from the entry. So that would have been the trade that resulted in you highlighting this bull channel. You see? So yeah, it takes time to practice and see these price action characteristics forming on the charts. It takes time. So now I'm going to highlight to you, I think on British pound before we wrap up. I'm going to highlight to you on British pound. I think we had a bear channel on British pound. Let me just share the MT4. Where's my MT4? Just hold on a sec. I need to share my. All right. Right. Can you see my chart, right? You can see the chart.
Yes.
Right. I'm going to go to British pound. Then we're going to go to a daily time frame. Okay, let me put my default template quickly. Default template. You can see on British pound, you see this up candle here. You see that candle that I've highlighted?
Okay. Yes.
Right. I'm going to highlight that candle and then I will drop down to a lower time frame. So this is a daily chart. Let me just highlight this candle here. Right. So that's the green candle together with the, let me highlight it and then let me zoom out a bit. All right. So that's H1, 30 minutes. Let's see. Even on a 30 minutes, it's not that clear because I don't like to go further to lower time frame. So you can see we had market moving down, right? And then we had this correction here. Let me highlight. So we had this. Then we had this low here. Let me show you. So we've got a bear channel here. We've got higher high, then another higher high here, and then we've got a higher low.
Okay.
Then we've got a higher low. And then market, can you see here? Market breaks
out.
Right?
Okay.
Trades away. Then it comes back. You see here, this is where you would have been a what? A seller. You see? Because you expect this trend here to continue to the downside. You see?
Okay.
That's why I was so pretty sure about British pound to crash to the downside. Because even by now, British pound moved all the way to where it started the channel on 30 minutes. It moved 221 pips. So there's a possibility that let me just screen. There's a possibility that after this break here, market can still move another 200 pounds all the way to 1.30 to the downside.
Okay.
Because normally after a channel breaks, whether it's a bull channel that breaks to the upside or a bear channel that breaks to the downside, the first price swing before the channel forms, which in this case is about 224 pips, the market will look to replicate the same move going to the downside on a bear channel and going to the upside on a bull channel. So yeah, this is the first part in the series of where we're going to be talking about. So we have already talked about the bear channel. Next on Wednesday we're going to be talking about bullish and bearish continuation. Then we'll also cover up bullish and bearish reversals. Then we're going to cover up the trend lines. So this is the first in the 4 series of classes that we're going to have. But as we go, I'll be repeating. You see, like now we have already done the supply and demand, how to draw the levels. Now we have done the channels. So before each and every class, we'll be doing a recap of what we did last time.
Okay.
Yeah. So now I think we've come to the end of our class now. 1 hour is almost up. 1 hour 6 minutes now that we've done. So I've been recording this video. I will upload it and share it with you for your reference, so that whenever you have any questions, you can always refer to the video. I don't know if you have any questions.
Not at the moment, sir.
Not at the moment. So I'm gonna send
just do your. Okay. Yeah. I must just do your assignment first.
Yeah, I need my supply and demand zones now. You have seen how to draw the the rectangle too. Once you have sent me those 2 assignments, then I'll be giving you more assignments. You see?
Okay, sir.
Yeah, because practice makes perfect. You see, that's the only way you can get better. Yeah, because I want you to be in a position to do your own analysis and then come to a decision to say, okay, no, I'm gonna buy this pair. I'm gonna sell this pair. You see, by yourself. That's the main. That's the main goal. Yes, of course, it's gonna take time, but that's the main goal. So yeah, so that's pretty much about it for today, and just make sure you get the computer sorted.
Yes, sir.
Yeah,
I will do.
Yeah, so that you do. If I may ask, what Windows are you running on your PC?
It's Windows 10.
Windows 10. And what processor is it? Your computer?
You see, I don't know nothing about computers. You see, I'm clueless when it comes to that.
Do you have the computer with you? Do you have the computer with you right now?
Yes, it's with me.
Right. On the keyboard, press press the window key and the letter R. The window key and the letter R. The window key is to your left, I think, next to Control or Out. On your left, right? On the left of the keyboard.
Okay.
Yeah. Press the window key. It's either next to the Control or the Out key.